And with me today is Melissa Opie from Keyhole Property Investments.
Hello.
Robert LaRocca from REIV.
Nice to see you again.
And Andrew Macbeth from Macbeth Property.
Hi, Karina.
Today we're talking about the difference between buying for investment and buying to live in yourself. Robert, is there a difference?
Look, I don't think anybody sets out to lose money whether they're going to live in the house themselves for 10 or 20 years or whether they want to buy it to rent it out. So at the base point, probably not a big difference. The process is going to be different though. There's a whole lot of terms you've got to come to know and understand if you're going to make an astute financial decision around investing as opposed to living in.
So what sort of things do you need to know?
You'll hear terms like owner-occupier, like yield, like gross yield, like rental vacancy rates. Also you'll hear the term negative gearing. And if you're not involved in the day-to-day exercise of investing for renting a property out, which is what investors tend to do, then those terms are going to be foreign to you. But you're going to need to know them because that's about understanding your financial position and how that relates to your future financial position, which is probably at the core of the whole purpose of investing, really.
So where would you go to learn these things? Could you ask an agent or a property lawyer or...?
You could probably ask all of those people. You can also do your own research. I mean, there's plenty of books out there that go through that entire exercise of investing. And I think, you'd want to do your own independent research by reading some literature, but then also talk to a lot of people, talk to real estate agents in the area, the property managers who you're ultimately going to hire to look after your property. Understand the entire process from the start to the finish and try to talk to the people involved so that you have a good understanding of what you're getting into. The accountant, the financial advisor, they're very important as well because sometimes having a third set of eyes to have a bit of a dispassionate view about the money can be really good because when you're making your own judgments you can invest all of these emotions and fears and dreams into it.
Andrew, what's a good yield on a property? And by yield we mean the average annual return.
Yeah, okay. For the rent in Melbourne at the moment, you'd be looking between 4.5% and pushing towards 5%, I suppose, depending on where it is. That's general. But
now that doesn't sound very, very high compared with other types of investment, but that's only one part of a property's return, isn't it?
That's right. I think that's just in terms of maintaining an investment. But also, I think growth is king. Rent's good. Rent helps you obviously pay for the thing, but at the end of the day, people are looking to create wealth, which is the capital growth.
Yeah. That's right, and I think that the capital growth is absolutely imperative, so I agree with you, because most people, to build wealth, they really can't stop at buying just one investment property. They need to buy a multiple property portfolio. So the asset selection in the first instance is really important, which will actually enable them to continue purchasing more by leapfrogging off one, using that equity and then going and buying multiple properties.
So Melissa, do you think there's a difference between buying for an investment and buying to live in yourself?
No, I don't. And the reason is that I believe that everyone should actually think with an investor's mindset in the first instance.
Andrew, you've got a track record in the investment markets.
That's true. Yeah, look, obviously everything Melissa's saying is 100% correct. Get your first one and then multiply it with the growth, the good work that the property's done. So, but look, if someone's trying to live in an area that they probably can't afford at that moment, it's probably best to rent or stay-at-home son or stay-at-home daughter, as the term is these days. So, and then start out investing and stay at home or rent where you want to live if you can't afford to actually buy there. And
also too, with the two residential purchases, one being the home to live in, a lot of people call that the heart purchase because people are actually buying with their emotions. And the other one is actually the dollar and cents purchase, whereby people are actually buying with an investor's mindset. So I think that when I'm acting for someone and I'm actually buying their first home, I'm actually beginning with the end in mind. And I think that our viewers really need to think with the end in mind. Where do I wish to be in 3 or 4 years' time or in 10 years' time? Am I single today? What type of wealth creation do I want for my future? Because even if they're going to be buying their first home, that home will dictate how they live in their future by enabling to actually, utilise the capital growth and diversify their asset base.
Yeah. Robert, that's a good point, isn't it? You need to know why you're buying a property before you start looking even.
That's right. You've got to look at how much money you're hoping to make from it and where that money's going to come from. Is it going to come from the capital gains or is it going to come from the rental income? Otherwise you may not get to your end goal. And how is negative gearing going to impact upon that and your wider income at that point as well? But it's a fascinating climate at the moment because, you know, you look at one of the big determinants upon investors getting in the market, the vacancy rate. The rental vacancy rate in Melbourne has been, you know, below 2% for a number of years now, and that's really low. And that should send a sign to investors that there's plenty of scope to buy and then rent that property out without a problem and gain income from it. But it doesn't appear to be occurring.
Andrew, you're dealing with a lot of new property, aren't you?
That's right, yeah. More people that are obviously, as we say, emotionally or financially focused. Ours are more financially focused. Yeah. So they've got equity in an existing home that they own, so therefore they can start looking at negative gearing and minimising tax, whatever their focus is. But obviously structure, affordability is the key. To get in, do it comfortably so you don't have to sell and you can keep it long term.
So what is comfortably these days? You know, what do you mean by comfortably?
Some people's comfort level is different to others, but some people, you know, on a combined income between, say, maybe 80 and 100,000 odd, comfortable contribution per week maybe up to $100 or a little over $100 a week.
That's a rent top-up?
Well, as their contribution, with the minimising tax and the rent top-up, as you say, their contribution to the pie.
And despite all these positive factors that we've heard about, you know, low vacancy rates and everything, we've seen the amount of loans, maybe across Australia, for investors going down for the last quarter and the last year as well. So there's a whole lot of different factors that are playing against each other there that can make it a very difficult market to read at times.
Well, I think we're just about out of time, but Robert, last minute tips?
Do your homework and take a medium to long-term view of the investment. You're not going to make all the money you expect to make in a year or two. You've got to take some time into the equation.
Melissa?
I think that you need to, regardless of whether or not you're buying a property to live in as your own home or as an investor, you really need to think of it as a business decision so that as your property goes up in value, that you're able to leverage off that and diversify your asset base.
Andrew?
Yeah, I agree with everything. Obviously, long-term view is the best, I believe, view for property ownership. If they're looking to invest in Melbourne, and I know this is Melbourne Property TV, regionally I like Bendigo as an investment option because of the extremely low vacancy rates there.
Been under 1% for quite some time now. It's very, very hard to find rental homes there.
That's exactly right.
Thanks very much, everybody.